All right. Morning, everyone. Let's kick it off here. All right. Last night's session on the S&P and the Nasdaq was a nice, solid move higher again. Sort of moving out to the right. We're getting very near to the S&P touching the 2,000 level, which is only about 13 points away from here. So. We had a big spate of earnings out again yesterday, so we've had corporate action that's really kind of been leading the markets for the last few sessions. We had Apple and Microsoft both rallying nicely yesterday on the back of earnings from the day before. Apple wasn't really so much of an earnings beat, but I think people are expecting good things for the next quarter with the iPhone 6 coming out. Then we had Facebook, which came out after hours or at the end of the session, and also a nice beat, new all-time highs after hours it moved to. So definitely looking positive in the tech space at this as we speak. We had mortgage refinancing that also rose by 4% from May to June, and that's also a bit of a bullish sign, just kind of showing that that interest rates are still as low as they've ever been at the moment. All right, looking at what happened in Asia overnight, we had a big bump up out of Shanghai, up nicely over 1%. That was on the back of better than expected manufacturing numbers. We had the highest manufacturing numbers, I believe, in 18 months, if I'm not mistaken, and we've also had talk about relaxation of some of the property curbs that have been in place there. Not going to happen necessarily across China, but in certain cities. So definitely some bullish sentiment, I think, coming out of China over the last few sessions. Hang Seng, I think, just kind of following on the back of China. Tokyo, the shares were actually down a little bit, probably more than anything because of some of the disappointing data that we had that came out of there. And then in South Korea, we were down a scrap, but it looks like they're going to ready to put in about $11 billion stimulus into South Korea sometime over the next month or two. So probably a nice support for them. All right, let's get into corporate action. This morning we had Vodacom, which came out with this first quarter trading update. You can see there, this number is definitely looking a little bit mixed. I'll just read you some of the comments from the analysts here saying that group revenues was a miss estimates by about 1.5%, but South Africa was quite in line specifically and held up particularly well, given that they had significant tariff cuts. Prepaid was strong, and I think data was strong, but definitely looking a little bit mixed. I think maybe a small miss overall. We also had SA Breweries, which is out this morning with some volume numbers, and it looks like a bit of a beat when you take out the Colombian numbers there in Latin America, which affected their Latin American numbers because of new regulations. I think that they had a small miss out of Latin America, but other than that, they had a small beat. I believe that Merrill Lynch is calling SA Breweries to open up 1 to 2% this morning. So. All right, we also got Union Pacific, we've got General Motors, we've got Ford, we've got Caterpillar, we've got Amazon, we've got Visa and Bristol-Myers Squibb all in the States. So we're going to continue on the earnings curve as we go along. We'll keep, I think in the next maybe week or so, we'll bring you some statistics on kind of beats and misses. And it's always really quite important to sort of gauge where we're at in that regard. All right, like we said earlier, we had some numbers out of South Korea, a slight miss out of the GDP numbers there. We had a trade balance out of Japan as well as manufacturing PMI, both numbers a little bit soft, dragging the index down there a bit. We also talked about the PMI numbers, the manufacturing numbers out of China, which were a nice beat, the highest in 18 months. We've got those same numbers coming out from the entire Eurozone later today, along with retail sales out of Italy and the UK. And then the States later, we've got initial jobless claims, also manufacturing PMI, and new home sales. All right, let's get into the maps here. All right, first thing that we're going to look at here is the 10-year U.S. Treasury yield, which you can see here. As of yesterday, we're making an assault on the lows. The closing it off, taking the bottom of this little pattern out because I'm going from the closing lows on yields. And when I looked at this last night, funnily enough, we were right at the lows. It looked like we were threatening to take it out. You can see that we bounced up off of 245 only just, but we're definitely approaching the lows of the last year, and I think that's really significant. We're doing it in the face of a lot of optimism in the U.S. and it just continues to drift lower, and the fact that this continues to happen is really saying something, and I think that's the market is really just not worried at all in the near term about interest rate hikes. So this is going to be one of our biggest leading indicators, obviously, for when we come out of that interest rate cycle. And so we're going to watch it like a hawk, but I think it's incredibly interesting that we approaching the year's lows on yields. All right. Sorry about that. Let's look at Kumba. Kumba, you can see here, really closed right at resistance on from where we broke down. We obviously were flagging into or I'll say flagging, it looked as though we were flagging into a couple sessions ago. It gave us a little head fake with a little bit of a breakdown from this flag. We've reversed back up. We're still inside the flag, but if we get above 352 here, I think it negates everything. We traded right at that level yesterday afternoon. We closed literally a hair below it, and it kind of felt as though we're going to get a pop through. If we get above that level, then I think that then you can say this thing's definitely out of its downtrend for the moment, and maybe it's potentially even time to own Kumba above 352. All right, let's look at Mr. Price. I wanted to show something. I was looking here last night, and I'm going to have a hard time showing this to you. In fact, I'm going to try to set this up on another chart and size it up for you guys so that you can have a look at what I'm talking about. But I went back and I looked at. I'm going to have to do a custom data range here. Okay, sorry, I'm just trying to get this chart going on my other screen so I can show you the comparison. I went back and I looked at ShopRite. It's going to be hard for me to get this totally right here, but let me just take this. Let me take this portion out. Oh no. I've messed it up here. Okay. Almost got it, I think. Okay, it's hard for me to get the to the right size, but what I'm wanting to show you here is what ShopRite looked like at this point. Now, what I'd like to do, I can't quite cut this out. What I want to do is I want to start the chart from here, from about May, and if you can have a look and see the similarities to these two setups, and how we notice the consolidation that we have around here, when then we drop off pretty steeply, and then we pop when we pop back above it, we have this little consolidation pattern, kind of almost like a little inverse head and shoulders. Look where the price is, right at 180. Look at ShopRite. Literally almost identical. I mean, if we stretch this out, I can't get it to set up correctly on here, but if you stretch this out, look at the consolidation, almost the exact same pattern. How we wavered here, we dropped hard here to the bottom of it, and then we reversed straight back up through it, consolidated just at 180, and when we popped up, we made this move. This is ShopRite. This is not Mr. Price. The price similarities here are actually staggering, and you can see here how it wavered a hell of a lot around 200 for several sessions. We popped up just a little bit, and then you guys can see what happened thereafter. Now, that chart looks almost identical to what we're looking at in Mr. Price. I mean, the similarities are ridiculous. I'll actually try to overlay these two and get a similar timepiece and maybe tweet it out a little bit later, so keep an eye on the Twitter account a little bit later. But the similarities here in the price movements, not just in the movements of the chart, but actually at the same prices are incredible. If you look at all this consolidation, this happened between 160 to 170 sort of level. I mean, this consolidation here, same sort of thing. It's happening from 155 or 150 to 160 sort of level. The breakout comes. This consolidation at 180 is the exact same price. We push up at almost a straight line. The similarities are quite impressive. I just called out an eye of that last night. I thought it was really worth a look, something really interesting. So it might be worth keeping in mind as we watch the whole Mr. Price chart play out. All right, after that exceptionally long-winded explanation, let's have a look at Woolies. We're going to look here on a 2-year again. I mean, I just wanted to come back to this one because we really, after breaking out here, obviously above $80 to new all-time highs. We can zoom it forward here a little bit. You can see that we kind of flagged here, made a little consolidation, or flagged or made a little descending triangle, whatever you want to call it. We popped up out the top. We look ready to take out new all-time highs, and I think we're going to probably make a quick move up to about $87 in Woolies. All right, and then the last one that I'm actually going to show is Nampak. We're looking at a 2-year here. And you can see we made a long wedge pattern here over the last 6 or 7 months, and really just narrowing out to about the breakout, which happened just above 38. You can see there as we broke out, we consolidated a little bit above it, and then yesterday absolutely ripped higher. This thing definitely got a higher target on it. Definitely looks like it's going to take out the highs of the year, and probably on up even closer to $50 on NPK. And that's it for today, guys. Trade well. Good luck out there.